Welcome to the Wild West, the What's Next, the Wild What's Next podcast. Maybe we should rename it to the Wild What's Next podcast. It's a bit of a mouthful.
Yeah, it is a bit of a mouthful. Let's just stick with the What's Next podcast. But
Sorry,
I
Dad.
love the beats. Oh,
Yeah.
DJ Kimmy's is in the house.
I do love that tune. Oh, it's good to be back, mate. Well, speaking of big W words, buddy, we're talking wages versus drawings today. Seems to be every business owner's favourite subject when they're newish to business, or even if they've been
Established.
Yeah.
If you're a wage earner, you would have celebrated the increase that you got on the 1st of April, you in particular.
Homai te paki to me.
Yeah, well done.
I'm making more cash.
Yeah, $20 an hour. Go the lads.
And what do we learn with these podcasts? That money exchanges hands when value exceeds price. So I didn't invest mine, I didn't save it, I didn't do the suggested things that I should do. I went and spent it in the economy and to help stimulate it, and it will end up over in housing again.
Yeah, not wrong, but that's a pod for another day.
Yeah, but I can do the same thing if I was on drawings too. But wages versus drawings, something we see all the time, especially popping up in little Facebook groups and stuff like that, and business owners talking amongst themselves at the pub. Oh, you on wages or are you on drawings? Oh, my accountant told me to do this.
We forget. Sometimes we become a little bit complacent.
Big C word there today.
About just how common it is a question that we get asked, and what's the answer,
Well,
Luke?
The first answer is we thought we'd done a podcast on this, but maybe we hadn't, so we're doing it again if we had. And Phil's two favourite words in accounting and life are, it depends. So that is the answer.
Far out, the man listens, people.
It depends.
Yeah, you're not wrong. It does depend.
I even wrote it down in my notes.
Did you?
I haven't had to reach
I didn't
out
even
to you.
write that one down.
Didn't you?
Nah,
No.
man.
Well, it depends, and it does depend,
And we
doesn't
were
it?
speaking before hitting the live button about wages versus drawings, and why are you asking that question to begin with? And the rationale that or the conclusion I think that we've come to, is that when you're in business, you want to make sure you're exploiting absolutely every tax loophole you possibly can.
Everything.
Because you got to write off those home office expenses. You got to write off that entertainment. You want to class that clothing as a uniform. You want everything. And wages versus drawings is one of those. And what's the hidden benefit?
KiwiSaver.
Yeah, well, ultimately...
Nothing. Sorry,
Nothing.
the hidden benefit's nothing.
Nothing.
Yeah, nothing. The podcast
There's
is
none.
done.
Yeah.
Get on with it. Make some more money, and then figure out a problem.
Yeah.
There's so many people want to know, and what's the difference, and which one's going to make me better off and stuff. And it's like you're going to get 50% of people probably saying wages, and the other 50 saying drawings.
Yeah.
And you should spend that time to become more productive or earn more money in your business and be able to take more out of it.
So much of it comes back to that old barroom advice, eh?
True.
Where, the tradies are standing around the barroom leaner on a Friday arvo, drinking their Lion Red, comparing...
Craft beer these days, mate.
Craft beer, is that what these Auckland ones do?
Yeah, probably more so the regions getting deeper into it now too, I hear.
Regions, are they?
Yeah.
Shit, maybe the economy is doing much better than we expected if they're all on crafties.
Well, we're just getting a bit... we're going that way a little bit. The craft way.
Yeah, okay.
Yeah, I've gone the vodka way, but anyway, it's different.
Yeah, you're trying to
Different set of
manage
problems.
those calories, eh?
Yeah. The Grey Goose, I tell you what.
The Grey Goose.
It'll sneak up on you like those crafties will too.
Yeah,
I can't. I grew up drinking the 4 and 5% lagers. Can't quite handle the strong ones, but anyway.
Whatever happened to the cruises?
Too high in sugar.
Yeah.
And I just sort of had to make some life changes that I thought were going to take me on a better direction for my next sort of chapter.
Yeah.
And I had to sort of kiss the cruises goodbye, so to speak. And
We might have to resurrect them at our next September bloody trip away.
I'll tell you a quick story. Because I saw the good people from Turbo Staff were having a big rebranding exercise.
Mm-hmm.
And they made some content. Ihaka and the crew, great bloke from Turbo Town from Palmerston North. And I thought I was going to watch this content because they don't often do video content. I thought, good on you, mate. So I watched this video, and about 2/3 in, at this big branding exercise that they had with all these people coming, there was all these cups on the table filled with this green liquid. I'm like, yes! He had about 50 cups full of, I assume it was cruises, or maybe lime cordial, but I assume it was turbo juice, Scudder Bombs, the old green cruisers. So good to see Ihaka getting that done. And some people still drinking them, obviously.
Wow.
Maybe if there's a sugar-free version, I might go back, but Maybe I've just become a bit metro since living in Auckland, and sometimes it's hard to admit these things about yourself, Phil, but I can go out to the airwaves and to the video these days and admit that I've changed.
Yeah, hashtag Amano.
yeah, not an ad. What were we talking about?
Yeah, I was just thinking wages versus drawings. We were coming back to, weren't we?
Cruises, yeah, drawings.
And whether you're getting wages or drawings, you'll be spending that cash.
Yep, you will.
And it's going to go on those cruises.
Can do. Happens.
But I think the one thing, coming back to where we were kind of, before we went off down this old beaten path, was more often than not, most questions we get asked from business owners seems to come from a place of they're looking for a benefit that they might not otherwise be claiming. And the classic one in year-end accounts, for example, is always, make sure my home office is claimed. Have you got all my home office details? Rah, 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 rah. And, if you put that much time and energy and thought into the home office questioning and whether wages versus drawings is right, as you did into growing your sales, you'd actually have more money to take out of the business.
Love it.
And we were talking before, that's right, it's coming back to me, the old barleaner. That's how we got onto the cruises.
Got it.
Those dudes are onto the crafties. And that's it. It's barroom advice because the dudes are getting together and it's, my accountant says I should do this. And, no, but my accountant says did that. So then it comes down to who's got the coolest accountant at the table because they perceive to be getting the best tax advantage. Because then one dude's going to be my accountant doesn't do that for me. He's ripping me off. Rah, 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 rah. Well, that's not the case at all because the thing they forget is everybody's got different circumstances. At the end of the day, whether you've got wages or drawings, you're going to be paying tax.
Yeah, and you're going to be paying the same amount of tax.
Yeah, in the long term. In the same year, the tax might be different, and it comes down to timing. It's called the accrual versus the cash basis for all you nerds out there.
None of you.
Yeah, including me. That's why I put, hate under accounting, Anyway, but over the long term, you will pay the same amount of tax. So really, it comes down to your situation and what works best for you.
Yeah.
It's as simple as that. There's nothing hidden or magic about the answer of going, I've read some stuff. You Google wages versus drawings on the old Google machine and it comes up and there's some accountants and probably some smart ones in there that have written some articles. And I saw, wages, that's an expense and it goes to your profit and loss statement and comes off your profit and rah, rah. Man, I got lost probably at the second sentence, man.
And you're an accountant?
Yeah.
How are these people, these everyday people of the street?
Way too techo for me.
Yeah.
Way too techo. So I think the magic answer is there is none. And it's what's right for you. And more often than not, as we tell clients, it's a cash flow decision. And it comes down to your own individual money personality. And you have to be really honest with yourself. What do you like with cash? Can you save money and stick to a budget? And if you can, drawings might be better for you because you can take out a set amount of drawings out of the business, live off of that quite comfortably, not need to dip back into the business for any more additional drawings. And because you've got good habits with cash, you'll be putting money away from tax. Because the key thing to remember with drawings is that is after tax money. Even though you haven't paid the tax to IRD, it is after tax cash you are spending. So the money that you are taking out, you are going to have to pay tax at some point.
Nice.
So you don't pay tax on the drawings. I'll make that really clear. You don't pay tax on the drawings. The accountant will do some smart stuff and allocate a shareholder salary to you at the end of the year. That's what you pay tax on. But the cash that you take out is the after-tax portion of that. So be really mindful of that. If you are on drawings, you need to save some money for tax. I can't stress that enough.
No, and that's often what happens, right? I think that might be part of where the question comes from too. Someone's like, I'm not even paying any tax because I'm taking drawings. And it's like, just you wait.
Yeah, that's going to catch up and bite you on the ass.
That means that you don't understand how tax works. It doesn't mean that you're not paying any tax.
And you're going to have, with that attitude, 2 years of tax to pay in 1 year, potentially. And that puts you on the back foot immediately in business. And that is how we see business owners battling at years 2 and 3 because they haven't been properly educated and they haven't, again, we come back to the previous pod around complacency and abdication versus delegation. They've abdicated their responsibility of understanding how this stuff works in business. And they need to take a better interest in understanding of how this works so they don't end up getting in the shit and being one of the statistics of businesses that fail.
Yeah, nice.
because they haven't managed their cash appropriately and they haven't been educated and haven't taken the interest in getting the education to prevent it from happening.
Because everybody thinks, yeah, so you're saying I'm going to have $5,000 in tax to pay on this date. Yeah, I'll have the $5,000 tax by then, sweet as. And they get to that date and they're like, I don't have it. And, I thought I was going to have it. And that's where wages can be good in times like that to ensure that you're paying your tax as you go, and then you have one less thing to worry about. The thing that I don't like about wages, mate, is I'm not much of a man of admin, and I'm like, then you've got to do PAYE returns and stuff, and if you undertax yourself,
zero
you
payroll
tax bills. Yeah, you still get it wrong.
Well, hang on, I'll put my hand up there because I do our payroll,
but I've done tax returns for clients at the moment,
and I've fucked it up.
In payroll situations too, and theirs is short, so they've got to build it, and they're like, how have I got tax to pay? Like I just get a PAYE salary, and I'm like, yuck, like it can happen, and I can see why it becomes frustrating for people.
Yeah, we both found out we got terminal tax to pay this year because I undertaxed one of our bonuses, eh?
Yeah, it happens.
Fucking payroll admin is not my strength.
If anyone knows a good payroll assistant, if they can get it.
Yeah, by the way, we're hiring, and if you understand payroll, put that on your CV, please, and you'll probably get bumped to the front of the queue.
Yeah.
But I think some of let's go through drawings versus wages and understand some of, not necessarily the benefits, but
the differences.
The differences.
Yeah.
Oh, God, look, it's just
I can finish the sentences.
The modern thesaurus. Gee, you read a lot more. So with drawings, you can just take cash out as and when you need.
Willy-nilly.
Willy-nilly. You're going to need to plan and budget for tax, and you will be a provisional taxpayer. So if you've got a standard balance date, that's 28th of August, 15th of January, 7th of May.
You've got calendar reminders for those already.
I know these dates better than my own kids' birthdays.
Really?
Yeah, that's shocking, eh?
Yeah, wow. And there's 3 kids too, yeah.
Yeah,
wow.
And then the final wash-up of tax. So if you've paid your provisional and you haven't quite paid it bang on right, for all you listeners out there, you'll have the wash-up, which is called terminal tax. That's due 7th of April the following year. So there's a few dates there to remember.
There are.
If you don't like, and provisional tax, if you've got lumpy drawings and you're taking a lot out, you might be paying $7, $10, $15, $20, $100,000 per installment.
Yeah.
That can be quite painful to write out a check for that much tax in one go.
Yep.
And certainly when having discussions with some clients and it comes to provisional tax time, it can be tough for them to get over that psychological hump of writing a check, but no one writes checks these days, but doing an internet banking transfer to IRD for a huge lump of tax.
However, most of them, because they're clients of ours and they're good listeners and subscribers to the content that we put out, they've been putting their tax money aside, haven't they?
They operate the seperate bank account system, they've got that tax ring-fenced away.
Yeah.
And they know what's the government's and they know what's theirs, happy days.
They're
but
like,
still,
I've got to pay $20,000 in prof tax, no worries, take it out of tax account B, bang, off it goes, happy days.
On we rumble. The other thing to be mindful of with drawings, ACC bills.
Yucky.
Yeah, you're going to get stung with, as soon as your personal tax return is filed, some ACC bills, niggly. But you'll get ACC bills when you're in the company, but it'll be under the company versus individual. It's just be mindful of ACC bills.
Yeah.
What else with drawings? Flexibility.
Yeah, this is extra for experts.
Extra for experts.
Get ready.
Yeah.
And you've got to be good at cash and understand tax. Like, you only want to be playing this sort of game when you really understand business and taxes.
This is not me, so I'll tune out.
So you're not doing this in year 1 and 2, and when you're listening to old mate down the pub, you may be taking drawings, and you may then delay your tax payments via using tax pooling and financing those payments so that you can use that money that you've actually put aside for tax to fund other things in your business, which is you playing Russian roulette of can you then recover that money before X amount of date. So there is that ability for some people to use drawings to play that game, to fund growth and different purchases within their business, to then finance their tax. Now, there's obviously a number of ways to finance things that you want to do in your business, but that is how some people that take drawings will operate, only very few, and they have to really understand tax and cash flow to be able to do that, don't they?
Yeah, I'm pleased you raised that. And I like the fact that it's Russian roulette.
Yeah.
I've never put it that way, and that's actually a really smart way of doing it, that essentially you are taking money that's allocated for tax, leaving it in the business and injecting it into something that is a growth activity, hopefully, that's going to add to the top line, which should contribute to the bottom line, and double it, triple it, 10 times it. By the time that your tax is finally due and you need to pay the tax intermediary, that you've got your cash back. And that is, are we going red or black?
So I'll give you a story of how this could be done so that you can see it. So you may choose not to pay your provisional tax installments that are due. And
let's take, for example, the 28th of August. So the first one, I'm due to pay 10 grand.
Yep. And you're like, I've got that 10 grand, but I'm not going to pay it. I'm going to put it into Bitcoin.
Bitcoin. Wow.
And now you can hear that. That's you starting to play Russian roulette. And
Yeah.
you're like, I'm going to take the risk that instead of paying the IRD the amount of money that I'm obligated to pay, that I'm going to, in the future, pay that back through a tax intermediary by effectively financing that payment as if it was due, as paid on the due date. And in time, I'm going to use my money from other avenues, or maybe even Bitcoin, to then pay down that tax, and hopefully,
and because you're a smart accountant, you would set me up a finance purchase with tax traders. # not sponsored.
Well, it kind of is sponsored. Yeah,
if you're listening, and you'll get me to pay the interest on that 10 grand to tax traders, and they've got bloody sharp rates, so it might only be a few $100.
Yep.
I pay that off to them. I keep my 10 grand. How long am I going to finance it for? 6 months? What's your recommendation, Captain Accountant?
With an asset like this, you're probably going to want a year.
A year?
Yeah.
To go the cycle of Bitcoin?
Yep.
Right, so let's say July, so we got tax to pay in 2021, so you're saying we're going to defer our P1 obligation to July 2022.
Yep.
Gee, that's a big old go. That interest cost is going to be a bit bigger than what I thought. But look, I'll write out the check.
But I'm hoping that my Bitcoin would have doubled in price.
So I'll put my 10 grand into my Bitcoin.
Yep.
And sit back and then just watch the old poker machine just go around and around and around.
Yeah.
Yeah, and then fast forward 12 months, then what happens?
I pull out my Bitcoin. It's doubled in value.
Doubled in value.
And
should have invested in Cardano, mate.
I have to pay tax on my double in value of my cryptocurrency anyway. So I've now got more tax implications. But I take the 10 grand, which is from my sale, and I pay the tax intermediary company.
Yeah, and you're still left with 10 grand.
Yeah. Minus my tax. Yeah. So we're not advocating for doing that, but you should be aware that that is why some people will do it. And so you may talk to the 5% of the 50% of people that take drawings that are like, that's why I do it. And you'll be sitting there going, what the hell?
You say that we're not advocating for a strategy around investing in cryptocurrency for a game. But what we are advocating for is a sophisticated working capital strategy.
Bingo.
Where if you've got the ability to leave cash in the business, that you can apply it to an activity that's going to yield a result that you wouldn't otherwise be able to achieve if you had that money tied up with tax, then fill your boots and get into it. Just know that on the flip side of it, using the example that our great accountant here, Luke, was just talking about, that if Bitcoin had actually gone the other way and shed some of its value, you're going to have to take out your Bitcoin. You got 5 grand, you're going to have to come up with another 5.
Yeah. So, if we took away the Bitcoin and swapped it for you investing in a new staff member, and you were hoping that they were going to generate you more income, and that was going to be your return on your investment, and you're going to pay your tax down with that, and you're happy to pay some finance on that, but then that doesn't happen, you're still like, that tax is never going away. It's not just like, oh, okay, I delayed it, but it's gone. It's coming for you. So it's always going to be at the back of your mind, and that's why we like our clients to stay current. Yep. But that's why having sophisticated advisors around you gives you options, but not at all times should you take those options. It's very much for a certain individual situation.
With our clients, I like to use the phrase of pay current year tax with current year cash. So then you're not going to get caught behind the 8 ball, unless you've got an overarching strategy like we talked about before, where you're executing a plan and that needs cash. So, and hiring a staff member is a classic example. To go and wrap up 10, 20 grand in tax payments that could otherwise go towards wages, that's tough.
Yeah.
And if you know, gee, I'm hiring a weapon and I'm going to get a 3x return on them, why wouldn't you?
but you need to know how to play the game. So that's why we say extra for experts.
Yeah, I'm pleased you raised that. That's
Extra
smart.
experts.
And that's a great example with the Bitcoin.
Oh, yeah.
And look, I think in 12 months, you probably expect it to at least 3x, 5x?
I mean, I wouldn't imagine that we've got not one client that would do that.
No. No, I'm just scratching my head thinking now of like
Can
a
I
client
think of
base.
any?
No, but look, if you're in the Bitcoin game, get in touch.
What else about drawings, mate? Anything else for people to think about there? Any differences? Drawings? Well, there's one. At the moment as well, we're recording this the start of June. I was just trying to think what month it was.
Today is the 2nd of June, I believe.
And you have to, if you want to get your government contribution for KiwiSaver, you have to have contributed your $1,024 or whatever it is by the 30th of June. Now, if you're taking drawings and you haven't been contributing to your KiwiSaver, or you've been taking drawings and you haven't even thought about KiwiSaver because you've got to actually do it yourself, then you probably want to catch up that $1,000 payment if you participate in KiwiSaver and you agree with it and you like it, so that you can get your guaranteed 50% return from the government.
Yep.
And if you are getting paid wages, whether you're in a job or whether you're taking a salary from your business through wages, you're probably opting into KiwiSaver and it's taking care of it as you go through that. And so you don't have that to worry about because you've probably contributed $1,000 if you're earning enough money. But if you are on drawings and you're not thinking about your KiwiSaver, you're potentially A, not contributing, and B, not going to get the government's 50% gain.
Judd, bang on. Great analysis, mate. And
you're
speaking music to my ears because I am a big fan of KiwiSaver.
You are, aren't you?
Yeah, I think everybody should be in KiwiSaver.
Yeah.
You've got to have a bloody good excuse not to be in KiwiSaver or some other type of superannuation scheme that's similar to it. But I think forced, whatever way you want to call it, superannuation savings and getting people into the habit of investing and then understanding it and tracking their investment, that's got to be good for our economy and people's education.
There was a rumour going around that you were going to start a KiwiSaver fund called Filthy's Fund and invest in only non-renewable energy sources. Is this correct?
Yeah, you probably that was supposed to be on the deal, mate.
Look,
it's out for the public, and if you're looking to subscribe into non-renewable sources of energy,
Filthy's Fund,
anything that's probably banned. So
guns.
I was just about to go. You know, we're companies that invest into those Saudi countries, Iraq, and
oil,
and all those ones. Yeah, oil, munitions. Yep. Big portfolio and landmines. That's rash.
But everything is going the other way. And hey, that's all good and well. But that's become such a big talking point of KiwiSaver now is what you're investing into. And I think that's the right direction. However, what concerns me is that people don't even understand KiwiSaver enough to then be told, do you know what your fund's investing into? And they're like, whoa, man, I was just trying to start my savings journey, and all of a sudden I'm getting judged for what bloody fund I've got. And so I worry a little bit about that KiwiSaver spotlight on all the things you should be doing.
It's very timely that you bring that up because I got an email this morning from my KiwiSaver provider, ASB Bank.
Not sponsored.
Hashtag.
Have to be. They're getting rid of them, aren't they? They're one of they're binning because of that shit.
Binned as a default provider, but they're still doing KiwiSaver.
Oh, you'll be in the top elite fund.
I'm in it's stacked to growth.
Yeah.
Yep. I'm playing Russian roulette here. And it had a brief email about my fund and links to go and click. And I was actually thought the email was going to say, hey, here's a little bit more detail about your fund. These are the types of assets and companies that your cash is invested into. And I was very curious, exactly on that point, are they investing in industries that are these not cool ones to be investing in at the moment? Or are they going, no, we're doing the right, being seen to be doing the right thing and making sure that your portfolio is green? I couldn't immediately find that, didn't have time to drill into it. I am going to drill into it because if it is a green portfolio, I'm going to move it all out.
Oh, yeah.
Yeah.
You've heard it here first.
Yeah.
Yeah, fair
enough.
enough.
I'll go and look it over at Milford.
Yeah. Yeah. A lot of our clients talk about the MILF. Yeah, the Milford. Yeah, trust.
Yeah, Milford.
Fund, whatever it's called.
Yeah. But look, hashtag not investment advice.
No.
But I just thought it was fascinating, and it's interesting that you bring that up, that so many of these bring it up. But coming back to wages versus drawings, If you are an employee, well, no, not even if you are an employee. If you're on wages as a business owner, so you're paying yourself wages, tick that KiwiSaver box.
Get it done.
You're going to get your 3% sacrifice out of your own wage. If that's a cash cost to you, we'll just bump your wage up so you end up with the same amount net in your back pocket. Then the other benefit as a business owner is the 3% deduction of the employer contribution. The employer is the company that's paying your wages. Your business is now a tax saving that you're going to get the benefit of come age 65. Yeah, it's a long way away if you're a young buck like us two lads here. But, you know, there's benefits there. Small, but KiwiSaver's a blooming good thing. I was going to say, just moving away from KiwiSaver, unless you want to touch on KiwiSaver a little bit more.
Oh, just one thing, because I know that the people that listen to this are educating themselves and they are high performers and they're seeking more from life.
Yes.
Do not, just because you're in KiwiSaver, do not outsource your retirement. Now, what I mean by that is don't go, okay, well, I've got KiwiSaver, I don't need to worry about my retirement now. Like, we want you to strive for more than that and, contribute to KiwiSaver, but learn about investing, learn about having some funds liquid as well, because here's why. If you're only in KiwiSaver and that's the only money you've got in the market, then when you're basically at the mercy of how the market performs. So say you retire at 65 and the market shits the bed and drops, then basically your KiwiSaver fund can halve. Now, then when it rides back to where it was, you've basically back to the money that you did have. If you have money liquid and you understand how the stock market works and you want to take some risk, and you haven't just outsourced your investing and your saving, you might go, I've seen this before, the market recovers from these things, and you put some money in at the bottom, and then it recovers its way out, and you've got some extra gains that you perhaps wouldn't have had.
Yeah.
So don't just look at...
Is this your experience with A2 Milk, mate?
Kind of. No, but like I saw it with this massive crash with COVID, and there were people that went, I've got heaps of money, I'm going to put some into the share market and hopefully this rides out of it. And then there were other people that went, holy shit, I'm scared of this, I need to go into conservation and protect the money that I had, and they sold out, and then they... There
was an article in some shit media publication, probably the Herald, that did, and this article wasn't crap. It was actually quite smart, and they quantified the amount of money that was lost by people that shat the bed and got their KiwiSaver funds out of growth and put them into conservative because they wanted to stop the losses.
1.6 billion.
Was it that much?
It was in Stuffed.
Stuffed?
Yeah.
Wow. Well, I should have known. I mean, you're Captain Stuffed there, aren't you?
Yeah, I was right up the Stuffed alley at one stage. Yeah, so what I'm saying to you guys listening is, you know, if you get educated, it gives you an advantage over other people, and... You know, you'll then get blamed for the education at some stage in your life that you've taken advantage of that. But people made money out of the ride back up. And so we're just saying to you, yes, contribute to KiwiSaver, but also have a wider lens of investing, and don't just go, I'm going to put my entire retirement into the hands of somebody else, because you're still at the whim of the market. So yes, contribute and be a part of it, but also think about what you could be doing to protect that, or protect other money that you have and grow it over time as well.
I think this is a blimmin' good reminder that if you're listening to this right now, to take a look at your KiwiSaver scheme.
Great idea.
And if you're in the car driving to listening to this while you're driving, take yourself a voice memo. Send yourself an email so it's in your inbox to remind yourself. But take a look at your KiwiSaver. Are you in a default scheme and you don't know it? If you are, you need to go out there and look for one that's not a default scheme. And get cannot encourage you enough to go and get the right investment advice to ensure that your KiwiSaver is in the right fund for you, particularly if you're the younger end of the age spectrum. So if you're in your 20s, 30s, or even 40s, you've still got years until that crystallizes and you're eligible to get that cash at 65. You don't want that shit sitting in a default fund.
A $500 contribution free from the government at the age of 25.
Yep. I
think at 7.5% growth each year is $10,000 by the time you retire.
The one $500 or the $500 every year?
Just one $500. So at 25, if you got $500 and it grew by, I think it's 7.5%.
Yeah, compound.
you would end up with 10 grand.
No shit.
Yeah. So that's why you want to do it, not just for the free money.
No.
Because that is a good return.
So then multiply that out across every year. Yeah, it's going to diminish the further closer you get to retirement. That's a lot of money.
It is. And that's what people need to understand. Compounding, not like, oh, fuck it, it's only $500. It's no.
Yeah.
You know, it's you've foregone the ability for that to compound because you can't touch it up until 65 at this stage. No doubt the rules will change. I'm pretty sure that's right. I think it's 7.5%. But I get some advice from Adam Stewart from Compound Wealth.
Mm-hmm.
And he's based in the South Island, but he's also in Auckland now. But he has a fact finder on his website, which you can go through and key in your data, and it basically spits you out a report, or their team in the background go and write you a report of like where they think you should be based on your age and your risk profile and stuff. So it's cool that more people are providing more advice in that, rather than when KiwiSaver first started, it was just like, jump in the default fund or jump in the growth one or whatever. But hey, we digress into a bit of KiwiSaver, but it's a good time. It's a very important time.
It is, yeah, and I mean, I'm big time into it. I'm into KiwiSaver. I watch my fund grow. It's fun.
Yeah,
watching it go up and down. And when it went down during the old shock last year, it was like, ooh, gee, can I double in and buy a little bit more while it was down? Gee, those freight stocks, eh?
Oh, they're going all right.
Oh my word,
15-20%.
Yeah,
nice.
But look, the other benefits on wages, if you're like me, and you want to stick to a bit of a budget, you want a little bit of certainty in your life, you know, you want to take your solid accountant's salary of, 55 grand a year, that we pay ourselves.
It's a big salary.
It's a huge
for an
salary.
accountant.
Yeah, especially for directors.
That's probably, we need to look into that.
We do.
It's excessive. We need a policy.
Salary sacrifice time.
Yeah, we need a policy around this.
Yeah, we do.
Yeah.
With a wage, you're going to set a salary, and I would recommend, even if you're a one-man band or you've got a couple of employees, use payroll software. Don't do this stuff winging it on spreadsheets or scrap pieces of paper. Payroll with Xero is an extra $10 a month on your subscription, I think, plus an extra $1 per employee. It's worth it at a minimum. If you're using MYOB, they're going to have a payroll thing. Use it. It's going to save you the hassle because it's going to track sick leave. It's going to track annual leave. It's going to keep all that HR stuff ticked off. Even better than that, use a cloud platform like iPayroll or
Smart
Payroll.
Ace Payroll. Jace's Payroll.
Yeah.
Stace's Payroll. There's so many of them.
Jenny's.
Yeah.
But use one of those. So iPayroll and Smart Payroll are two of the common ones that we come across frequently, and they basically outsource your payroll. So you pay them per pay run and employee, set up a direct debit authority. They take the cash out of your bank account gross. They'll pay the employees.
Oh, yeah.
They'll keep the amount that's for the IRD. They'll do the filing, and then they'll pay the tax. So that's like you've delegated your payroll. All you need to worry about is making sure there's enough cash in the bank either each week, fortnight, or month.
Because they'll direct debit it and they'll spit it to everywhere it's supposed to go, right? Employees, IRD.
100%. Yeah. So, I mean, for us, we use Xero Payroll, process that once a month, and, we just get paid when I remember.
Yeah. 55 grand each.
Yeah.
Done.
A week.
Yeah, a week. No,
I don't know where my pay's going there, mate, because I've had money not hitting my account.
Hey, you have to ask Grace, mate, not me.
But, yeah, use it, because I'm not going to jump onto the IRD website, use their great payroll calculators. They've got some doozy calculators on that website that's going to track my net pay, my PAYE, my KiwiSaver contribution, my ESCT deductions, and then spit it all out and then enter it into a payday filing form somewhere. Yeah. Nah, bugger that. I'm lost. So Xero Payroll, you bang in your $20 an hour, and, Luke here's working 12 hours a week, I think. And he's getting his minimum wage, happy days, all the deductions taken care of, and it does the payday filing for you.
Yeah.
On We Rumble. And the cash is in the bank, and then you might find, hey, look, gee, we're having a great year, and there's a bit of cash in the bank. Why is there cash in the bank? Because, well, we're focusing on our top line and absolutely cranking some sales, and we're managing our GP, so we're super efficient. Overheads are slick as because we run a tight ship.
So there's profit there. Yeah.
Yeah, so it's going to be bonus time.
Oh, yeah. I love a bonus.
Yeah. So to clear out the profit, we'll declare a bonus. This is, I suppose, advanced.
Extra for experts.
Extra for expert section, much like the drawings with managing your tax through tax traders or a tax pooling intermediary of your choice. Wages is the other one. To manage your profit expectations is to pay bonuses.
Yep.
And that's what we do.
And we get the tax right on those.
Not all the time.
For the people listening.
Yeah, have been
trick for young players. Yeah,
it has been.
What happens there? It's keeping you in a lower tax bracket. Is that right?
When you do it in zero payroll,
tell it.
This is a top tip for younger players.
Yeah,
is there's a section in there where if it's a lump sum payment, you click a thing and a box comes up and you enter the amount of the lump sum payment, and you got to tell it what bracket you're in.
39%.
Whether you're high, medium, low, or whatever.
Yeah.
And I must have selected the wrong one.
Oh, yeah. User error. It happens.
Happens. Yeah.
But the IRD, for people that are getting a wage around the country, they're constantly looking at their software is now looking at how much you're getting taxed throughout the year to try and take more if you're being undertaxed from your employer, or let them know, hey, you need to bump it up a little bit, because they don't want you to end up with tax to pay, because they don't want it to leave in your capable hands and not pay it.
Do you reckon with our good track record and the marvellous work we've done with some of our clients that we could get that tax written off this year?
No.
Okay.
It's worth a shot.
Yeah, I suppose. I had to be asked.
Yeah.
Other benefits for wages. Certainty of cash is probably the biggest one.
And then people need to ask themselves the question, do I know how to manage my personal finances?
Yep. Oh, sorry, the other thing to think about or remember, the key benefit versus drawing is the tax is taken care of.
Yeah.
The net that you're getting paid into your bank account is just being treated exactly like an employee would be. You've been paid, the tax has been taken care of, so you generally won't have to worry about paying provisional tax at those 3 dates. If you can't remember them, rewind it and have another listen.
Good man. 28th of August, 15th of January, 7th of May.
Yeah, you've been doing this a while, haven't you?
I have.
Yeah.
Yeah, 3 of my favourite days of the year.
You know what they'll change the dates on us again sometime soon, eh? Wouldn't that be punishing?
But I think it's a good point too, with that certainty, is then going back to what you said right at the start, like your money mindset, then it's, right, what do you do with that money? Because I think a couple of the key points here, you're still going to get taxed. You're still going to end up with the same amount of tax, whether you're on drawings or wages. Like over the long term, you're not going to, there's not some magical thing that you don't know that other people know.
Yeah.
And so the more important thing is, what are you doing with the money once you've got it? Because us humans will find a way to blow it, and it'll go somewhere.
Yeah, and that's in the car on the way here, I spoke to a client and said to me, having a great start to the year. Ripper. Sales up, GP slick as, going well, great guns. There's cash in the bank, and there's some bits and pieces have changed on the outside of work situation. And we had originally set the PAYE salary X, and the first question I said is that salary still appropriate, or are you having to tap into the business bank account and taking drawings on top of it?
Yeah. And
they were like, oh, yeah, well, now that this has changed and that's changed, we might have to relook at the salary. I'm like, sweet as, we can do that.
Yeah, nice. Because that other piece of not understanding cash in a business can kick in when someone's like, oh, I take sporadic drawings, it just depends how much money I've got in the bank. When you've got a set wage that's constantly going out, and you're like, oh, it doesn't look like I'm actually going to be able to afford to do this. Because sometimes a client, for instance, said to me, oh, well, we should have made last profit year because we brought those 2 vans. And I'm like, remember, paying for vans isn't a business expense. It's a capital item that goes on your balance sheet.
Classic one, eh? And that's probably why in February we were fielding all those calls and inquiries about vehicles, because people are thinking, oh, I'll go and splash all this cash on new vehicles, thinking I'm going to save myself tax.
No, it doesn't work like that. So, you do have to be mindful if you are paying yourself a set wage. Is this wage actually appropriate and going to match the cash flow that this business produces, much like Phil said right at the start? It's actually a question of the cash and your availability to use it.
Yeah.
Yeah.
If you've got certainty or predictability of revenue, so business revenue, So let's say you run a subscription-based business and you've got 10,000 subscribers that are paying you $100 a month.
Must be the Herald.
Really?
No, they got 100,000 subscribers.
Oh, I thought they only had a couple.
No, they've done really well apparently.
Really?
Yeah.
Is that because they've given it all to free to their existing paper subscribers, so it pumps up their numbers?
I don't know, but I saw their CEO talking about how they've gone past the 6-figure mark, which I did think, like, you know,
Pucky.
yeah, a little bit. Like it's a hard thing to do, and they've done it. So who knows how profitable that is? But anyway, sorry, I distract you.
With a subscription-based business, and using your example of an online media platform that is going to charge for premium news articles, there's going to be X amount of subscribers paying X amount of dollars per week or month. You're going to have a certainty of income, and you're going to know what your costs are. So profitability is just going to just pump out. Pay yourself a wage. There's a lot of certainty there. Whereas if you're a lawyer, and, you know, the property market's up 1 minute, next minute you busy as with conveyancing, and then the next minute we're in lockdown and there's no conveyancing happening, it's night and day for the income that you're going to be making. So it's going to make doing wages that little bit harder.
So wages, to get geeky accounting before we finish, they're going to go on the profit and loss statement.
Would debit expense and credit the bank account, wouldn't we? Look, if anyone's out there in maybe one of these big four franchises, if I've got my debits and credits around the wrong way, just let me know.
Because what people do need to be mindful of that take drawings is they'll look at their profit and loss and go, oh, we've got an $80,000 profit for the year, but we don't feel like we've got any money. Yeah, because you've taken 50 grand worth of drawings.
Yeah.
Or whatever it is. So those drawings aren't on the profit and loss because you're drawing out that profit to spend rather than
what we
taking
should
it as
do?
a wage.
When we move to the next stage of our content creation journey, all to be revealed to our listeners pretty soon, we should do a session where we do a visualization of how money flows through a business.
We'll have a giant session.
Yeah, should be a big old go.
If anyone would like to come in and join us.
Yeah.
No, it's a great idea. I think we can talk about it on the webinar.
It reminds me of that, remember that board game that we played at...
Cash flow.
Yeah, at that
Ice
House
House
thing. Was it called Cash Flow?
I think no, I think that's Robert Kiyosaki's one.
But there was one, and that was all about buying stock and understanding cash and then turning it into profit, yada, 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 yada. As a game. Great for people that haven't been exposed to that before who come from a non-accounting background. I think if we're able to chart that, I'm pretty sure there's going to be videos on YouTube that we can just R&D.
Surely.
But just put our spin and our next advisory flair onto.
I'm not pleased you brought that game up, because it's still terrible.
Oh, you're a bit dark that you came second.
Yeah, I am. Yeah,
fair enough.
I like to think I'm not much of a competitive person, but I think it really got thrown out the window in that game.
Yeah.
We were leading, and then just got overtaken late. But I actually thought that game was really, really good.
It was.
To teach people about accounting. I thought, if I had known that I could have played this game for 4 years to understand business or go to university, I would have picked this game.
What made me dark about that game is my team came...
last, I think.
Yeah, no, it was. It was.
Really?
We were in the bottom half.
Yeah.
And it was because, we picked a strategy and we stuck to it. And the whole thing with this game is there's really a number of strategies. There might be 4 or 5 strategies that you can pick. And really there's only 1 or 2 that are going to put you in either first or second. And our strategy only worked under particular circumstances and would only pay dividends in a much longer play. And for how you play the game, it wasn't to be. Yeah. I'm dark about that because it's like, no, we picked the strategy, we stuck to it, happy days, we were making money, but not enough to pip Team 1.
Yeah. Oh, they did well.
Yeah,
we'll have to find out what the name of that is, because I'm sure people can probably go and buy it if they are interested, but I doubt that they will.
But if anyone from the Ice House is listening...
Yeah, they'll know.
Gareth? Get in touch.
Yeah, be doing sales somewhere, so be too busy to listen to these. But
Liz, maybe?
Yeah. Anything else for wages or drawings, mate? I think the key question from the start again is, why are you asking this?
I reckon that's really good.
Yeah.
A really good way to frame it.
Because there's 2 things as well. It's like, what don't you know, and then go and learn it, and then get on with it and never ask this question again. And then secondly, what's prompted you to think about it? Because it's probably a conversation with somebody else telling you about their situation, and you've thought, mine's just a little bit different than that. Am I missing out on something? I'm going to go down a rabbit hole of trying to figure this out.
The last thing that it's just come into my mind on the wages front, if you do go down that pathway because you like the certainty, stick to it. Do not tap into that business bank account and go, oh, gee, I'm a bit short on some cash this week, this month. I'll just take some of the business's cash because that's the drawings.
Yeah, okay.
And that's going to tinker with some little things and make the accountant's job maybe just a fraction a little bit harder. And it'll be a really good test to make sure that you stick to a budget and manage your personal finances. And you should find that if you focus on building your business and the right strategy, that then your business bank account will become almost a forced savings bank account and the cash will build up in there over time.
Good man. Well, that has been wages versus drawings. I'm sure you've enjoyed that 46 minutes. Who
46?
Yeah, who would have thought? There's a couple of tangents in there and a bit on KiwiSaver.
No, but there's some bloody gems in there.
Oh,
I
for
reckon
sure.
if you go and see your accountant and ask them all these questions, you'll end up with a whopping fee.
The average fee from an accountant is about, the average hourly rate, at least $350 in our industry. So 46 minutes of that. We've just given you $300.
No, times that by two because there's two smart
Good
dudes
point.
in the room.
There's $80,000 worth of advice.
Yeah.
But go and listen to this a couple times, and if you get mates saying wages or drawings, send this to them.
Send them the link.
We
please.
should be talking about more productive stuff than bloody wages versus drawings. You're getting stuck in the weeds. We want you to find yourself in space. LMP at nextadvisory.nz. Go and make some more cash. Get it done. We'll see you next time.